Welcome back to ShareTreck.
Thanks for having me.
You bet.
Always a pleasure.
Today we're going to be doing a deep dive
Well,
into...
it should be good.
Yeah,
Some interesting stuff here.
I think so. We've got some CNBC market coverage that we're going to be looking at as our guide. I'm Jack.
And I'm Diane.
And we're going to
Let's get into it.
figure out what all these stories mean. Okay, let's start with the U.S. market.
Okay.
Destination Wealth Management
Okay.
is predicting continued growth. But there's a caveat. It all hinges on tax cuts.
Yeah,
Do you think that's a realistic concern?
absolutely. Investor confidence is huge. When it comes to like markets moving and tax policy, you know that's a major factor in all that. If those tax cuts don't materialize or they fall short of expectations, that could trigger like a shift in sentiment, and then you could see a sell-off.
So it's not even just like the policies themselves, it's
The percent.
how people are perceiving it.
Yeah, it's like a self-fulfilling prophecy. If enough investors believe the market is headed in one direction, they can actually make it go that way with their actions.
Wow. So even for someone who isn't actively day trading or whatever, just kind of understanding the sentiment
It matters.
is valuable.
Yeah, absolutely. It helps you make sense of like the bigger picture, like the economy,
Right.
and then that can inform your decisions about all kinds of things, personal investments, purchases.
Right. All makes sense. Okay, so let's shift gears a little bit and talk about the French bond market. Seems to be facing some challenges. And one strategist suggested that
Oh, really?
the struggles that they're having right now might actually be the catalyst for resolving the political upheaval.
Okay.
How's that even possible?
Well, bond markets are very sensitive when it comes to political instability. So, like, when a country's political situation is just uncertain,
Right.
investors become very wary of lending money to that government through bonds.
Because they don't know if they'll get paid back.
Yeah, exactly. So that uncertainty can lead to decreased demand for those bonds, which can push interest rates up. In France's case, the strategist is suggesting that the pain in the bond market could actually incentivize leaders to find a resolution to the turmoil,
Wow.
to kind of like restore confidence.
So it's almost like the bond market is a barometer
Right.
of political stability.
Yeah, you could say that. The health of a country's bond market
Yeah.
is often seen as a reflection of like their overall well-being, economic and political.
Makes you think.
Yeah.
Let's move on to something that affects us all. Inflation.
Yeah.
Jefferies' Laurie Goodman is forecasting a potential spike
Okay.
down the line. What are the main drivers that we should be keeping an eye on?
Well, inflation is a complex thing. There's lots of factors.
Right.
Supply chain disruptions are a big one. If the flow of goods is interrupted, like natural disasters or geopolitical events or other factors, it can lead to shortages,
Right.
and that pushes prices up.
Yeah, we've seen that recently.
Exactly. Government policies can also have a role. For example, increases in government spending or changes to monetary policy can sometimes lead to inflation.
And then on the flip side, the consumer side,
Yeah.
pent-up demand
Pent-up demand.
can also drive prices up.
Yeah, absolutely. If consumers have more money to spend. But there's limited supply. It's like a classic supply-demand imbalance.
Right, classic Econ 101.
Exactly.
So it's really a combination of factors. What does all this mean for, like, the average person
Yeah.
trying to manage their personal finances?
Right.
Should we be worried about this potential spike?
It's definitely something to be aware of. A rapid increase can really erode your purchasing power,
Right.
making it harder to just afford the things you need.
Mm.
There are some strategies you can consider, though, like diversifying your investments, maybe some assets that tend to perform well. During periods of inflation.
Okay. Good to keep in mind.
Mm-hmm.
Speaking of market reactions, the recent plunge in gold prices
Yeah.
really caught my attention.
Yeah.
It's interesting how it seems connected to two
Yeah.
seemingly unrelated events. The announcement of Trump's treasury pick.
Yeah.
And the potential truce between Israel and Hezbollah. Help me understand this.
Sure. So it all comes down to how these events influence, like investor sentiment and how risky things seem.
Okay.
Gold is considered a safe haven asset.
So when investors get nervous, they run to gold.
Yeah, exactly. They think it'll hold its value, even if other assets are declining. But when news breaks, that signals more stability, like a new treasury pick or a peace agreement. It can trigger a shift.
Okay.
They might start feeling better about riskier assets, like stocks, and they'll pull away from safe havens, like gold.
So These announcements seem to indicate
Right.
like a more stable global outlook. So some investors sold off their gold.
Exactly. And that sell-off contributed to that plunge that we saw.
Wow. It really highlights how interconnected everything is.
Yeah.
Let's hope the stability holds. Speaking of potential plunges, though,
Ooh.
oil prices are also making
Oh.
headlines with predictions of a drop
To $40
to $40
by
2025. If OPEC decides to unwind its voluntary production cuts, what's going on there?
So OPEC, the Organization of the Petroleum Exporting Countries, has a really big influence on oil markets
Right.
globally. They control a big portion of the world's oil production, and they can adjust their output levels to stabilize or, influence prices.
So if they decide to increase production,
Right.
that could flood the market, drive prices down.
Exactly. Right now, they have those voluntary production cuts that are in place to help keep prices stable. But if those are unwound, that could have a major impact on the price of oil, potentially leading to that $40 prediction.
Wow. And what would that mean for just like
Right.
consumers like me? Would we see lower gas prices?
Potentially, yeah. Changes in the price of crude oil often translate to changes at the pump. However, there are other factors that can influence gas prices as well, like refining costs and local taxes.
Okay. So it's not a guaranteed one-to-one
Right.
correlation, but
Right.
definitely something to keep an eye on. Okay. Let's talk about tariffs. Tosca Fund Hong Kong made an interesting observation, saying that Trump's approach is being perceived as a European approach. Can you unpack that?
Sure. To understand this, we have to look at the history of trade policies. Europe has often taken a more protectionist stance on trade, using tariffs to shield their industries from foreign competition.
Where the U.S. has traditionally favored free trade agreements.
But Tosca Fund Hong Kong is suggesting that Trump's actions, like imposing tariffs, might signal a shift towards a more protectionist approach, kind of like Europe.
So is this like a temporary tactic or a long-term strategic shift?
That's the big question. It's something all the experts are debating. It's still unfolding, the long-term implications of this.
Yeah. It seems like these tariffs are having kind of a mixed impact on various industries. Redburn Atlantic believes that 5 tech stocks in supply chain management could actually benefit from these tariffs. But then European auto giants seem to be rattled.
Yeah.
How can tariffs have such contrasting effects?
It all comes down to how different industries are structured and how much they rely on global supply chains. In the case of those tech stocks, those disruptions in global supply chains can create opportunities for companies that offer solutions to manage those complexities.
So companies that help businesses navigate these new trade barriers might actually do well.
Exactly. They can provide valuable services to companies trying to adjust their sourcing strategies and optimize their supply chains.
While companies that rely on imports would struggle.
Right. Like the European auto industry, they rely heavily on imported parts and materials. And those tariffs can really increase their production costs.
It's making them less competitive here.
Exactly.
But then some companies just seem unfazed.
Yeah.
Like Ferrari doesn't seem too worried.
It's fascinating.
Why is that?
It highlights how brand loyalty and a niche market can protect you. Against these economic headwinds, Ferrari has a very specific customer, one that is less sensitive to price fluctuations. They're more focused on the brand, the prestige, the exclusivity.
So their customers are willing to pay a premium.
Pretty much.
So factors like brand loyalty, supply chain flexibility, and the nature of the company's target market can all play a role in how they weather these trade storms.
Absolutely. It just shows the importance of looking beyond the headlines and understanding those nuances of specific industries.
It really does show the complexity.
Yeah.
And speaking of complexity, let's talk about the Chinese yuan. Investment banks are forecasting that it's going to hit record lows as the U.S. tariff threat looms. What's the reasoning behind that?
Currency markets are really intricate, but in simple terms, a weaker yuan makes Chinese exports more affordable.
Okay.
It's a way to maybe offset the impact of those tariffs.
So it's like a counter move.
Yeah, exactly. Every move has consequences, and both sides are strategically trying to position themselves.
Right. This trade war is having far-reaching effects. We're seeing it in tourism. The number of international travelers visiting the U.S. has dropped, like 10% since 2019.
Wow, that's significant. It underscores how interconnected the global economy is. Trade tensions and political uncertainty can make people hesitate to travel. And, of course, a weaker dollar makes it more expensive for Americans to travel abroad.
It's a reminder that these global events have real consequences for individuals,
Hmm.
not just like corporations.
Right.
Okay, on a slightly brighter note,
Mhm.
shares of chip suppliers jumped after reports that the U.S. might be considering easing those China curbs. Interesting.
What's going on there?
Well, this goes back to that idea of market sentiment, any indication of like easing tensions between the U.S. and China, especially in a critical sector like semiconductors.
Yeah.
It can spark optimism
Right.
among investors.
So those chip suppliers are breathing a sigh of relief.
For now.
For now.
But, things can change rapidly
Yeah.
when it comes to geopolitics and finance.
That's true. Okay. Let's switch gears again. Back to Destination Wealth Management. The same firm that predicted continued growth in the U.S. market also had some interesting things to say about the bond market. They're suggesting there's more room for bonds to run. Interesting.
Why are they so optimistic?
Well, they believe that inflation will stay relatively subdued, which would support continued demand for bonds. They're also betting that the Fed will be really cautious about raising interest rates too aggressively.
So it sounds like they're taking a calculated risk based on their outlook.
Yeah,
What do you think?
it's a bold call. Time will tell if they're right. Bond markets are tricky, but it's essential to consider different perspectives and weigh the risks and rewards.
That's good advice.
Mhm.
Now let's zoom out, talk about the bigger picture. We've covered a lot of ground today. Market rallies, inflation worries, trade wars, currency fluctuations. What are some key takeaways you think our listeners should keep in mind?
Well, one of the biggest lessons is that everything's connected. Global events, economic policies, market trends, all intertwine. What happens in one part of the world can have ripple effects across the globe.
Yeah, we saw that with the trade war on tourism and the gold prices reacting to events.
Yeah, exactly. Another key takeaway, understanding market sentiment, it's really crucial. It's not just about the data and the economic indicator. It's about how investors perceive those things and how their actions can influence things.
So even if you're not
Yeah,
actively investing,
right.
it's good to pay attention to these sentiments.
Yeah, absolutely. It can help you make sense of the financial news and make better decisions about your own finances.
Okay, good to know.
Hmm.
It's clear that staying informed is more important than ever,
Yeah,
but with so much information out there,
it's overwhelming.
it can be overwhelming.
It's important to be selective
Mm.
about your sources and focus on those fundamentals of economics and finance.
And having a trusted guide
Yeah,
can make all the difference.
absolutely.
Okay, now let's turn our attention back to the U.S. market. There's been a lot of buzz about a potential market correction.
Yeah.
Do you think investors should be concerned about that?
Well, market corrections, they're a natural part of the cycle. They happen. And while they can be unsettling, it's not necessarily a reason to panic.
Okay, but they can be a good time to kind of
Yeah,
reassess your strategy.
exactly. A market correction can be a buying opportunity. For those long-term investors, it's important to remember, investing is a marathon, not a sprint.
Right, and having a diversified portfolio
Yeah,
can help mitigate
absolutely.
the impact of the fluctuations.
Don't put all your eggs in one basket. Spread your investments. Reduce your risk.
Good advice.
Yeah.
Now let's talk about something that's been on everyone's mind lately. Artificial intelligence. How do you see AI shaping the future of finance?
I think AI is already transforming the financial industry. It's being used to automate, analyze data, detect fraud, even provide personalized advice.
So it's not just about robots taking over Wall Street. It's about making things
It's about efficiency.
more efficient and accessible.
Yeah, exactly. AI could potentially democratize access, make things more affordable, and user-friendly for everyone. It can help investors make better decisions by giving them more data and insights.
That's pretty cool.
Yeah.
Sounds like AI could revolutionize how we manage money.
I think it can, and we're really just at the beginning.
Okay, so before we wrap up, I wanted to touch on one more topic. Sustainable investing. It's become so popular. What are your thoughts?
Sustainable investing, also called ESG investing, is a way to align your portfolio with your values. It means considering those environmental, social, and governance factors when you make decisions.
So it's not just about maximizing returns. It's also about making a positive impact.
Exactly. And it's growing. People want to make their money work for good, and this offers a way to do it.
That's great. So the world of finance is evolving. Investors are becoming more conscious
Yeah,
about their impact.
I agree. We're seeing a shift towards a more holistic view, one that considers not just performance, but social and environmental responsibility.
That's a good note to end on. We've covered a lot today, from market predictions, global events, to AI, sustainable investing.
Yeah,
It's been a fascinating deep dive.
it has.
Thanks for joining us.
My pleasure.
Always a pleasure to have you here
Thanks for having me.
to share your expertise.
Happy to.
And to all our listeners out there, thanks for tuning in. We hope you enjoyed this deep dive into the world of market movers and shakers. Don't forget to like and subscribe to ShareTreck for more in-depth explorations of the topics that matter most to you. Until next time, stay curious and keep learning.
It really does.
Yeah.
Just goes to show how complex it all is.
Yeah. Okay. Speaking of complexity, let's talk about the Chinese yuan. Investment banks are forecasting that it's going to hit record lows
Wow.
as this U.S. tariff threat looms. What's the reasoning?
Well, currency markets
Yeah.
are notoriously intricate.
Yeah.
But to put it simply, a weaker yuan makes Chinese exports more affordable globally. It's a way for them to offset the impact of the tariffs.
Kind of like a counter move.
Yeah, exactly. In this chess match, every move has consequences. And both sides are really strategically trying to position themselves.
Right. This trade war is really having far-reaching effects. We're even seeing an impact on tourism. The number of international travelers visiting the U.S.
Oh, wow.
has dropped by 10% since 2019.
That's a big decline. It really shows how interconnected the global economy is. Trade tensions, political uncertainty make people hesitant to travel. And then, of course, a weaker dollar makes it more expensive for Americans to travel abroad.
Yeah. It's just a reminder that these global events have very real consequences for individuals, not just, corporations and governments. On a slightly brighter note, though, shares of chip suppliers jumped.
Oh, really?
After reports that the U.S. might be easing those China curbs.
Interesting.
What do you make of that?
Well, this goes back to that idea of market sentiment. Any indication that things are easing up between the U.S. and China, especially in a critical sector like semiconductors, can really spark optimism among investors.
Okay, so those chip suppliers breathing a sigh of relief.
For now.
For now.
As we said before.
Things can change quickly.
In the world of geopolitics and finance.
Okay, let's switch gears again. Back to Destination Wealth Management. They had some interesting things to say about the bond market.
Okay.
They're suggesting there's more room for bonds to run.
It's a contrarian view.
It is.
Considering that interest rates have been rising.
Yeah.
Typically when interest rates go up, bond prices go down.
Right. So why are they so optimistic?
Well, they believe that inflation is going to stay relatively subdued, which would support continued demand for bonds. And they're also betting that the Fed will be very cautious about raising interest rates too much.
So they're kind of taking a
calculated risk.
A calculated risk.
Yeah.
Based on their outlook.
Yeah.
What do you think of their prediction?
It's a bold call. Time will tell if they're right. Bond markets are really hard to predict. But it's always important to consider those different perspectives and weigh the risks and the rewards.
That's good advice. Okay, now let's zoom out for a minute, talk about the bigger picture. We've covered a lot of ground today. Market rallies, inflation worries, trade wars, currency fluctuations. What are some key takeaways you think our listeners should be keeping in mind?
Well, one of the most important things is that everything is really connected. Global events, economic policies, market trends, all intertwined. What happens on one side of the world can have a ripple effect across the globe.
Yeah, we saw that firsthand.
Yeah.
With the trade war impacting tourism.
Yeah.
And the gold prices reacting.
Yeah.
To all these geopolitical events.
Exactly. Another key takeaway, I think, is that understanding market sentiment is crucial. It's not just about the hard data or the economic indicators. It's about how investors perceive those things and how their actions can influence the market.
So even if you're not like an expert investor,
right,
it's still good to pay attention to sentiment.
Yeah, absolutely. It can help you make sense of the financial news and just make better decisions about your own personal finances.
Makes sense. It's clear that staying informed, understanding all these forces at play in the global economy is more important than ever.
Yeah.
But with so much information out there,
right,
it's overwhelming.
It's important to be selective about your sources and just focus on developing a solid understanding of the fundamentals of economics and finance.
Okay. And of course, having a trusted guide can help you navigate all this complexity.
Absolutely.
That's what we're here for.
That's right.
Okay. Now, let's turn our attention back to the U.S. market. There's been a lot of buzz about a potential market correction.
Yeah.
Do you think investors should be concerned?
Well, market corrections are a natural part of the economic cycle. They happen periodically.
Yeah.
And while they can be unsettling, it's not necessarily a cause for panic.
Right. But it can be a good opportunity to kind of reassess your investment strategy.
Yeah, exactly. A market correction can present buying opportunities for those long-term investors. It's important to remember that investing is a marathon, not a sprint.
Right. And having a diversified portfolio can really help mitigate the impact of those fluctuations.
Don't put all your eggs in one basket.
Right.
Spread your investments across different asset classes. That way you can reduce your overall risk.
Good advice. Okay, let's talk about something that's been on everyone's mind lately. Artificial intelligence. How do you see AI shaping the future of finance?
Well, I think AI is already transforming the industry in profound ways. It's being used to automate tasks, analyze data, detect fraud, even provide personalized financial advice.
So it's not just about like robots taking over Wall Street.
Right.
It's about using technology
To make financial services
Yeah.
more efficient
Yeah,
and
exactly.
accessible.
It has the potential to democratize access, to make things more affordable, more user-friendly for everyone. It can help investors make better decisions by providing more data and insights.
That's really cool, it sounds like. It could revolutionize how we manage our money.
I think so.
Oh.
And we're just scratching the surface. Wow. Okay. Before we wrap up, I wanted to touch on one more topic. Sustainable investing.
Yep.
It's become increasingly popular. What are your thoughts on this trend?
Well, sustainable investing, it's also known as ESG investing. It's a way for investors to align their portfolios with their values. It involves considering those environmental, social, and governance factors when you make your investment decisions.
So it's not just about
Yeah.
maximizing financial returns. It's about making a positive impact.
Yeah, exactly. And it's a growing trend. More and more investors are looking for ways to make their money work for good. And sustainable investing offers a way to do that.
That's encouraging. It seems like the world of finance is evolving.
Yeah,
Investors are becoming more conscious of their impact.
I agree. We're seeing a shift
Sure.
towards a more holistic view of investing, one that takes into account not just financial performance, but social and environmental responsibility.
That's a great note to end on. We've covered a lot of ground today.
Yeah.
From market predictions and global events to AI and sustainable investing. It's been a fascinating deep dive into the world of finance. Thanks for joining us.
My pleasure.
It's always a pleasure to have you here
Thanks for having me.
to share your expertise. And to all our listeners out there, thanks for tuning in. We hope you enjoyed this deep dive into the world of market movers and shakers. Don't forget to like and subscribe to ShareTreck for more in-depth explorations of the topics that matter most to you. Until next time, stay curious and keep learning.
Yeah, it's been a really great discussion.
Yeah, it has been.
There's just so much to unpack.
I know. I feel like we could talk for hours.
Right.
We've covered everything from market trends
Yeah.
and global events to the impact of AI and sustainable investing. Hopefully our listeners feel a little more equipped now to navigate this crazy financial landscape
Yeah, I hope so.
and make good decisions.
Knowledge is power, right?
Exactly.
Especially when it comes to money.
Yeah. And remember, you don't have to be some Wall Street hotshot to take control of your finances.
Right.
It's all about taking those first steps,
Yeah.
staying informed.
Yeah, and asking for help when you need it.
Exactly.
There are so many resources out there to help people learn about this stuff.
That's true. And you can always count on us here at ShareTreck to bring you those insightful analysis
Absolutely.
and expert opinions on the topics that matter most.
That's what we're here for.
So to all of our listeners out there, thanks for joining us on this deep dive. We hope you enjoyed the show
And don't forget to like and subscribe to ShareTreck.
so we can keep bringing you
More in-depth looks at
these
these.
important topics.
Exactly.
Until next time, stay curious and keep learning.